Matt and Mark Justice bringing you a tackle today. All of the top charts, news, all of the happenings in the market, targeting 10 minutes here. Matt, the markets are set up for a technical week next week. High bases, pullbacks. I know a lot of traders are going to be looking for patterns next week. Break down the technicals for us.
Yeah, definitely going to be looking for secondary patterns after the week that we have seen play out. There's no doubt about that. And when you are looking at the S&P 500 through the spiders, they have recovered the drop that they had after the Japanese yen started unwinding. If you recall, just a couple weeks ago, we were talking about the Japanese yen unwinding. We were talking about the labor market imploding. We were talking about the Fed misstepping on the messaging side of the equation. What we were not talking about is earnings. And earnings has been fairly decent throughout the quarter, Mark. And once that kind of Japanese yen trade unwinded, it's been a recovery moment, and you have officially recovered all of that drop in price as of right now in that V-shaped recovery. It's been one of the technically a challenging environment, no doubt about that, over the course of the last couple of weeks, but it is getting cleaned up very quickly. We talked yesterday in the Traders Lounge about how yesterday's price action was the official ending of the short-term bearish downtrend as you got back up above that 50-period moving average. The weekly chart certainly was confirmed earlier this week and does look to be coming into that confirmation as well. And so as of right now, it's been a really good market recovery. Now the question is, what's next? And the what's next is a secondary pattern here would be really, really powerful. Anything on the high base side, anything on the pullback side, such as a flag, you want to keep it momentum based. So high bases, bull flag based patterns. But from if you were a bull this week asking for the market to settle in, settle down, smooth out that volatility, you got that and then some on the top side. It's been a really, really good week for the bulls, not just from a price action perspective, but from a overall narrative perspective as well.
Yeah, let's talk about that narrative. And I know the technicals in the tackle trading newsletter that will be released later on today. I have a feeling you're going to detail those technical patterns that we might be looking for
I certainly
in the
am.
coming week. Okay, so this has been a really, really big narrative week for the Bulls. Like coming into this week, you had slowing growth worries. You had economic data that had Goldman, JP Morgan, others raising recession probability. This week delivered a really strong narrative as we head into a light economic stretch. You had inflationary numbers that came in very supportive of the falling inflation, give the Fed an excuse to cut narrative. But more importantly, you had economic data on Thursday that alleviated some of the pressure of those growth worries and quickly had bulls talking Goldilocks, where you have falling inflation, a growing economy, but not too hot of an economy. This was a massive week, Matt, for the Goldilocks. Everything's okay narrative in the market. Anything to add?
Well, just one quick point on that, Mark, because you summarized it very well. This week has been one of those Goldilocks weeks, but again, Goldilocks in the sense that nothing's perfect out there, but the information we got this week certainly did alleviate some of the concern on the inflationary side and on the economic side. And we call it Goldilocks because it allows it goes to the central bank, and the rationale or the logic that the central bank would be utilizing to cut interest rates, Mark, because historically cutting interest rates is a negative sign, because historically when the central bank cuts interest rates, it's for economic concerns. If you're cutting for economic concerns, that's usually a telltale sign of pretty negative warning signs for the market, quite frankly. But if the central bank can alleviate the restrictive territory of the interest rate, which is at 5.25%, and that's about 2% on top of the restrictive territory. If they can simply alleviate that restrictive territory due to the inflationary or the deflationary trend that's not going to be the economic warning sign to the market that if we were having that concern about the economy. And so it's Goldilocks because it allows the central bank to cut for the deflationary purposes, which could be seen as a positive for the market from a growth perspective. In the other scenario, if they're cutting for economic concern issues, usually that's a warning sign for the market.
Yeah, and I look forward to having a more detailed conversation on this subject in the Trading Justice podcast that you and I will put out this weekend. Matt, earnings season is coming to an end. We still have NVIDIA here in a couple of weeks that we'll talk about, which will be the market story that week. But we had another semiconductor company, very important in the semiconductor food chain report today. And also some other semiconductor news coming out of the CHIPS Act. So kind of a semiconductor news day. What do you got for us?
Yeah, we got two semiconductors in the news here today. Texas Instruments is in the news after they got $1.6 billion in funding from the Chips and Science Act. That's been one of the administration's acts that's been kind of funneling a lot of the semiconductor growth narrative over the last couple of years. So Texas Instruments, this isn't the first time they were the beneficiary of that act, but certainly one of the beneficiaries of it right now. Applied Materials also came out, and that's Tackle 25. It's been a Tackle 25 cover call stock for, I don't know, 9 years now.
As long as I can remember.
And it's going to be there for a while because it's one of my favorite semiconductor equipment companies.
It's
Right
just a
there, but
solid company, isn't it, Matt?
it's a
Just
very
solid.
good company. It's a very good company, very well ran company, a lot of confidence in the management. Applied Materials came out and they had what I would describe as an okay quarter. Nothing to knock your socks off too aggressively out of Applied Materials. But when you are looking at some of their raw numbers, they came out against 212. Expectation was 201. Revenue did top the expectation of 6.67. They came in at 6.78. They also saw a slight, and I do mean slight, but they do have a slight increase in the range of guidance, which you could argue as an upgrade of guidance, but it's in that slight territory. And so this is what I usually see out of Applied Materials: slight beats on everything. They got slight beats out of everything, and that's kind of what's a base case for an Applied Materials earnings report. And so they came out, they did pretty decent, and now they move on. H&R Block had a strong earnings day here today, not necessarily from the actual raw numbers perspective, but they did announce a dividend hike. They announced a $1.5 billion stock buyback program, and that's after they also came out with beats of 1.89 versus the 1.71. That's a good beat on the EPS side of the equation. And so you got beats everywhere. You got an increase in guidance. You got a increase of the dividend. You got an increase of the stock buyback program. H&R Block just rewarding the investors here today very handsomely, I would say, as well, as they are gapping and running away from that gap out channel. A real good breakaway gap type scenario could put it on the runaway gap as well if you're looking for the official label of that gap. But that was just a very strong report out of H&R Block, and it's good to see those companies reward the investors like H&R Block did here today. Applied Materials had earnings. It was an earnings day. That's about what it was. That's about what we get out of Applied Materials. But I do like the development here. Very similar to the development we are seeing in many of the technology names. Deeper retracements, starting to get into those so deep of a retracement that it's no longer a retracement type conversation. And then Texas Instruments, the beneficiary of the Chips and Science Act, certainly tried to gap up, tried to run away. Couldn't do that because you got a real strong overhead on Texas Instruments. When you pull it out to the weekly chart, you see how it's fighting that overhead at 200. That's a significant whole number. And then you got a lot of chop on top of 200 as well for Texas Instruments. But that's what we got for stocks in the news here today.
And Matt, I'm adding a little gold exposure today. I cannot ignore this technical pattern, higher lows, so well behaved. Matt, we've been telling the gold story for a long time, but this is another chapter, and it's a really good look as we close out the week, isn't it?
I've been so impressed with gold all week long. Gold should have sold this week for a variety of different reasons. Everything you said on the economic side of the equation was slight beats, but slight beats send dollars up. Slight beats that send the market up in this environment like that typically sees gold down. So you got the dollar going up a little bit this week. You got stocks going up a tremendous amount this week, and gold held through all week long. I was so impressed every day. I thought I was going to wake up to a big red candle mark every single
Oh
day.
yeah,
And
absolutely,
every
100%.
single day there was like, nope, sitting on the a nine, sitting on the nine, sitting on the nine, and then you get that just pound the table type upward movement in price here today. Looking pretty good on that breakout at 2,500. Looking pretty good on that multiple time frame situation as well. Technically, when you're looking at some of the other areas of the commodity space that we're tracking right now, we're tracking the reversal in copper right now, still looking pretty good. Still need a little bit of work to do, and still looking at that 4-2 handle as that resistance level. On the silver side of the equation, silver bucking the trend on that double bottom type scenario, trying to fight off a little bit of slowing momentum. And as of right now, I would be looking at this as a very similar head and shoulders as we are looking at it on the copper side, just developing a little bit higher on the chart. And so you still are looking at that 2930 level. You're still anchoring against the 50 period moving average. Both copper, silver, both looking head and shoulders. Reversal light about, I would say about 60% of the way through the development of both these reversals on silver and copper here.
A lot of good looks, a lot of stuff to talk about this weekend, and talk we will here in the newsletter that we will be releasing in a few hours for our pro members. You can get a look at that newsletter, that world-class newsletter, by signing up for a 15-day free trial at tackletrading.com. And don't forget to check out the Trading Justice podcast that Matt and I will be doing this weekend.